Stop losing money on impulse trades, start winning with discipline. Trading can be a roller coaster of emotions, especially when the market takes a nosedive. But don't let those red numbers on your screen dictate your actions. Instead, take a deep breath, and remember that disciplined trading is the key to long-term success. It's not about making quick, impulsive decisions based on fear or greed, it's about having a well-thought-out strategy and sticking to it, no matter what the market throws at you. Here's how with Dhanda, the great's top tips. Raj has been in the trading game for years, and he's seen it all, the highs, the lows, and everything in between. His experience has taught him that the most successful traders are those who approach the market with a clear plan and a calm mindset. So let's dive into his top tips for mastering the market with discipline and confidence. First things first, set clear goals. Before you even think about making a trade, you need to know what you're aiming for. Are you looking to build long-term wealth, or are you trying to make a quick profit? Do you want to focus on a specific sector, or are you open to exploring different opportunities? By setting clear, specific goals, you'll have a roadmap to guide your trading decisions and keep you focused on what really matters. Know what you're aiming for before you even think about hitting that buy button. It's easy to get caught up in the excitement of the market and make impulsive decisions, but having clear goals will help you stay grounded. Take the time to define your objectives and write them down. This will serve as a constant reminder of what you're working towards and help you stay on track. Next up, create a solid trading plan. Your trading plan is your blueprint for success. It should outline your goals, your risk tolerance, and your strategy for entering and exiting trades. Think of it as your personal guide to navigating the market. Without a plan, you're essentially flying blind, and that's a recipe for disaster. And stick to it like glue. Once you've created your trading plan, it's crucial to follow it consistently. This means resisting the urge to deviate from your strategy, even when the market gets volatile. Remember, your plan is designed to help you achieve your goals. So trust in the process and stay disciplined. Think of it as your market map. It'll guide you through the ups and downs. Just like a map helps you navigate unfamiliar territory, your trading plan will help you make informed decisions and stay on course. Whether the market is soaring or plummeting, your plan will provide the structure and guidance you need to stay focused and avoid making rash decisions. It'll guide you through the ups and downs. The market is inherently unpredictable, and there will always be ups and downs. But with a solid plan in place, you'll be better equipped to handle the fluctuations and stay on track towards your goals. Remember, it's not about avoiding losses altogether. It's about managing them effectively and staying focused on the bigger picture. And hey, managing your risk is key. One of the most important aspects of disciplined trading is risk management. This means understanding how much you're willing to lose on a trade and setting appropriate stop-loss orders to protect your capital. By managing your risk effectively, you'll be able to stay in the game longer and avoid catastrophic losses. Never invest more than you can afford to lose. This is a fundamental rule of trading that cannot be overstated. It's easy to get caught up in the excitement of a potential big win, but it's crucial to remember that every trade carries risk. Only invest money that you can afford to lose without it impacting your financial stability. This will help you stay calm and make rational decisions even when the market is volatile. Spread your investments to avoid putting all your eggs in one basket. Diversification is a key strategy for managing risk. By spreading your investments across different assets and sectors, you can reduce the impact of any single loss on your overall portfolio. This will help you achieve more stable returns and protect your capital in the long run. Now, here's a golden rule. Keep your emotions in check. Emotions can be a trader's worst enemy. Fear and greed can lead to impulsive decisions that can derail your trading plan and result in significant losses. It's important to stay calm and composed even when the market is volatile. By keeping your emotions in check, you'll be able to make more rational decisions and stick to your strategy. Panicking over every dip and spike? Not cool. The market will always have its ups and downs, and it's easy to get caught up in the short-term fluctuations. But panicking over every dip and spike will only lead to stress and poor decision-making. Instead, focus on the long-term trends and stick to your plan. Remember, successful trading is a marathon, not a sprint. Stay calm and let your plan do the work. Track your trades. Keeping a detailed record of your trades is an essential part of disciplined trading. By tracking your trades, you'll be able to analyze your performance, identify patterns, and learn from your mistakes. This will help you refine your strategy and improve your trading skills over time. Keeping a journal helps you learn from your mistakes and successes. Your trading journal is like a personal coach that provides valuable insights into your trading behavior. By reviewing your journal regularly, you'll be able to identify what works and what doesn't, and make adjustments to your strategy accordingly. This continuous learning process is key to becoming a successful trader. It's like having a personal trading coach. Lastly, always keep learning. The market is constantly evolving, and staying informed is crucial to staying ahead. Make it a habit to read financial news, watch market analysis videos, and listen to trading podcasts. The more knowledge you have, the better equipped you'll be to make informed decisions and adapt to changing market conditions. The market's always changing, and so should your strategies. Flexibility is key in trading. As the market evolves, so should your strategies. Be open to learning new techniques and adapting your approach based on the latest trends and data. This will help you stay competitive and maximize your trading potential. Read, watch, listen. Soak up all the knowledge you can get. There you go. With these tips, you'll be well on your way to mastering the market with discipline and confidence. Remember, successful trading is a journey, not a destination. Stay committed to your goals, follow your plan, and keep learning. With time and practice, you'll develop the skills and mindset needed to thrive in the market. With these tips, you'll be trading like a pro in no time. So, ready to conquer the market? Embrace the journey, stay disciplined, and enjoy the process. Trading can be incredibly rewarding, both financially and personally, when approached with the right mindset and strategy. So, ready to conquer the market? Remember, the key to success is discipline, patience, and continuous learning. Stay focused on your goals, follow your plan, and keep your emotions in check. With these principles in mind, you'll be well equipped to navigate the market and achieve your trading objectives. Hit that follow button for more tips from Dhanda the Great. Happy trading! Stay tuned for more insights and strategies to help you succeed in the market. And remember, the journey to becoming a successful trader is a marathon, not a sprint. Keep learning, stay disciplined, and enjoy the ride. Happy trading!